Good morning, everyone. What's up? Capital Preservation Friday, January 3rd. It is January 3rd. This is the theoretical last day of the holiday season, but as you know, with former President Jimmy Carter's passing, I believe it was last week, markets are going to be closed on Thursday, January 7th. I believe it's Thursday at least, last I checked. Yeah, so they're going to be closed then, from my understanding, so next week is going to be a partially closed week as well. But in terms of the holiday season and the holiday hours, this is going to be the final Friday of that time when volume is expected to theoretically come back to the markets in a little more of full force starting next week, considering we have daily volume on the S&P 500 currently sitting at 116,000 contracts, which is pretty weak all in all. A few more pieces of information here. We'll talk about the U.S. Steel and Japan along with Carvana, right? Carvana had a very, very impressive, what was the ticker symbol? Yeah, of course, CVNA. Had a very, very impressive run over the past few years here, right? Starting in 2023, if I'm not mistaken, when we were trading sub $5, and all of a sudden we peaked out nearly at 270 with a very, very exponential gain here. So we saw that in the first day of trading in 2025, first and foremost, we had a pretty rough start. NASDAQ and the S&P extend their losing streak to 5 consecutive sessions, of the Dow Jones falling for the 4th straight day. Meanwhile, Sixth Circuit struck down the FCC's net neutrality rules. On a brighter note, oil prices did break out, reaching $73.31, its highest level since mid-October 2024. So we'll take a look at Tesla as well with Carvana, see what's going on. Yesterday, the S&P 500 heat map, 5 out of the 11 sectors closed green, with energy leading up 1.4%, consumer discretionary lagging 1%, 1.08 if we want to be a little more precise. But that's not terrible, realistically. 5 out of the 11 sectors closed green in the midst of a down day in the overall equity market, while Nvidia and Tesla had green days. Nvidia holding things up very well. First and foremost, let's talk about Carvana here. When Hindenburg Research sniffs out a corporate nonsense, they don't just jingle a bell, they light a bonfire, and this time their target was Carvana. They've gone deep, deep, deep in a deep dive. The comeback. Remember, in 2024 alone, Carvana rose nearly 285%, supposedly leaving bankruptcy fears behind. Hindenburg calls it an illusion. So, CEO Ernie Garcia III's father, Ernest Garcia II, a convicted felon, by the way, sold billions in stock before Carvana's prior collapse, and now he's offloaded another $1.4 billion. Former insiders claim that Carvana approved nearly everyone, leaving borrowers drowning in debt while bundling subprime loans, and Hindenburg compares it to the early 2000s mortgage crisis. While Ally Financial stepping back, a new unrelated buyer conveniently emerges, likely Cerberus, led by Carvana board member Dan Quayle? I'm not fully sure, but drive time connections as well. We had we have seen that Carvana needs to offload warranties or inventory at inflated prices and sells to Dad's private dealership, which equals problem solved. Hindenburg alleges aggressive accounting, mid-tier auditing by Grant Thornton, and potential undisclosed SEC investigations. Now, the bottom line, Hindenburg believes that Carvana's turnaround is driven by subprime lending, insider profiteering, and questionable accounting. They're currently short on Carvana and predicting that shareholders will be left holding the bag while Garcia's walk out away billions richer. It seems that Carvana is continuing its larger decline to the downside here. Earnings over the past few quarters, surprisingly in 2024, they only missed one quarter, the first one. Otherwise, it seems like they've done extremely well on the earnings front, and with that leading a charge to the upside, it seems that they've been doing good in earnings since May 2023, but I haven't really looked into the depths of it, but it does scream a little more fishiness, where we've had a near 300% rally in a single year, while the stock was trading just under $5 not too long ago. If we take a look at Tesla, we talked about Tesla a bit yesterday as well. Tesla was a very big piece in the media and the news on the weekend due to that explosion in Las Vegas that we saw. And first, the EV logged its first annual sales drop in over a decade. Then, like I talked about, a rented Cybertruck packed with fireworks exploded in a valet lane of Trump's Las Vegas hotel, and sales sank 1.1% in 2024 from the previous year, and it's first time since 2011 that the Tesla global vehicle count ended lower. Blame slowing demand, aging models, and discount deals that trim margins. Guess the days of unlimited hype and minimal competition are fairly over. Meanwhile, the Cybertruck loaded with fireworks erupted in flames outside a Trump International Hotel, injuring 7 people and killing the individual inside. Authorities are treating the incident as a terrorist attack. However, the attacker may have overlooked the fact that the Tesla truck is essentially a tank. It doesn't blow up very easily. Despite the setback, analysts remain optimistic about Tesla's ambitious vision for AI and autonomous technology, and they argue that a temporary slump in sales is insignificant when you're focused on building the future. The stock's down 6%, right, that we saw from yesterday. It's trying to slightly baby gap up here in the pre-market, but nothing crazy, realistically. And in terms of expected movers and what we got going on today, in terms of individual stocks, I'm not too sure. We'll talk about equities very shortly, but first and foremost, let's talk about steel. America and Japan in the midst of a steel battle, from what it seems, right? United States Steel Corp, with ticker symbol X, right, has done pretty well over the past few years. It's in a very strong, large consolidative range. But remember, America has an iconic steel industry, a huge steel giant. It's over 120 years old, and it could be taken over by the Japanese producer, which has not gone well in the U.S. So multiple reports suggest that President Biden today will block Nippon Steel's $14.9 billion deal for U.S. Steel, which again, right, is on the screen, ticker symbol X, after interagency committee CFI-US left the decision in his hands. Nippon Steel will have to fork over a $565 million penalty payment to U.S. Steel should the deal collapse, in a move that will have reverberations for M&A among the closest U.S. allies for the foreseeable future. Right, we saw that X is down about 8% to like $30 a share, well below the buyout. The agreed upon buyout by Nippon was $55 a share, which would send this into the skies. So deep-pocketed Nippon hope the acquisition would expand its global footprint at a time when Japan's firms are looking for international growth as our country deals with shrinking population crisis. Recall that the steel industry has been in focus following the approval of the Infrastructure Investment and Jobs Act, which is expected to boost U.S. steel demand for investments in bridges, railways, and other projects due to Buy American provisions in the legislation. And Nippon has estimated that the only major speed bump would be union support, while investment concessions would yield the necessary political leverage. That didn't happen. Excuse me. That didn't happen. A number of senators initially voiced opposition, like Pennsylvania's John Fetterman, who represents one of the most important states involved in American steel industry. It's absolutely outrageous. He declared steel is always about security, both our national security and the economic security of our steel communities. I'm committed to doing anything I can do using my platform and my position to block this foreign, deal. Bipartisan support against the takeover later picked up, and one of the final nails in the coffin happened during the election cycle when both Biden and Trump battled for the blue-collar vote. So prior to the agreement, Nippon, there was a bidding war that saw the U.S. Steel reject an unsolicited $7.3 billion cash and stock bid from rival Cleveland-Cliffs. That the deal was less than half of what Nippon would pay for the company only 4 months later. So U.S. Steel would go on to announce a strategic review process and invited several more offers, including one that was reportedly made by U.S.-based Nucor, ticker symbol NUE, which might serve as a basis in the future should the buyer step back to pick up U.S. Steel at a reduced price. So, as we have it, not really too much news. We got Fed's Barkin speaking today. We've got Capital Preservation Friday, people. So right now, what's going on in the S&P 500? Yesterday, I only had, I think, like 2 trades, if I'm not mistaken. But What's going on was a pretty strong push to the downside yesterday, which closed on a more neutral ground in my opinion. The S&P 500 auction low is at 59.05. Right now we're climbing up to 59.40 area, which is above that 59.20, which puts some kind of upside pressure, and the weekly bounce is holding out to the bull side currently. So as I see things, we have a huge barrier at 59.50 where the seller might appear, but realistically we're in a position to potentially have a Friday buy day as things stand. So I'll be looking for something of the case. Like I said yesterday, it's not very bullish if we can't break above 59.90 to start things off on the S&P, but things are looking like they want to attempt some rallies to start things off, and then we'll see where that goes. I'm not fully convinced that the downside's completely done just yet, but we are seeing a turning point here, auctions being accepted back to the upswing and starting to see things turn around. So hope everyone has an amazing Friday. We'll call it here for today. We'll be back on stream next week, and we'll chat then. Have a great weekend, everyone, and take care, and let's do this again. We'll open up our live trading room, and that's all I've